Hey traders, this is Blake Morrow with Traders Summit, and I'm really excited to bring on Mr. Koenraad Vanderschrick. He is from Forex Analytix, and I work with him pretty consistently throughout the course of the week, and I'm so excited to bring him here on the Traders Summit to talk shop with us. Koen, or better known as K-Man around our community and around trading communities around the globe, good to see you.
Hey, hi Blake. Hello everybody. How are you?
Good, good. It's really nice to have you here, K-Man. We talk every day, and
Yep.
normally just you and I, but you have so much background, and time under your belt and trade desk that I thought it would be really important to talk about some of your ideas that have really, they're really starting to come to fruition for this year. In the markets. But before we even do that, I want you to talk just a little bit about yourself, what your background is, just so people that aren't familiar with who you are understand exactly where you come from.
Yeah. Okie dokie, Blake. Thank you. So I've been in the markets for about 42 years now. And the bulk of my career, I traded for one of the major or many of the major commercial banks in the world. I'm not going to cite them, but they were all top 10 commercial banks. And for the whole of my career, I really made markets on the foreign exchange spot desk. Marketing the big clients, the institutionals, the hedge funds, central banks, and the big corporates of this world. And I've been market making in most currencies. Back in the old days, it was the ERM. Then we moved over to more of the euro pairs. But really for the past or for the last bit of my career, and that is a pretty decent bit for 17 or 18 years, I've been market making yen, mainly the dollar yen, yen crosses, of course, as well. And that's been really the second half of my banking career has been evolving around the yen. But along the road, of course, I've been holding books, proprietary books, trading books, and be trading options, as well as FX spot. A few non-deliverable forwards in the markets. Been touching a bit of everything, and of course, thanks to all that, I've been having a pretty broad view on whatever goes on in the markets.
And it's really interesting because as you've been trading and market making in the yen for the last, did you say 16 or 17 years?
Yeah, 17, 18 years, yeah.
17, 18 years. This is the first time that we've seen a real risk of the BOJ actually coming from, a ZIRP or, zero interest rate policy or negative interest rates. As your time as a dealer in Japan, is that correct?
Never seen it.
Okay,
Never.
so but this is the real first time risk that we're seeing it, correct?
Yeah, absolutely, absolutely. So it should be a very, very big thing. We've already seen moves on the back of it, but it is really a first for, I'm going to say, 80, 90% probably, if not more, traders who have been present for decades. We've only seen them cutting rates and trying to get their economy back out of the dumpster. So this is a first.
It's also interesting for me because I started, I cut my teeth in the FX market around 2001 when Americans, we could start trading spot currencies. We couldn't do that prior to 2001. So when I started trading currencies, I was just kind of getting into the groove of things, going into about when you started trading on the Japanese yen spot desks, and that's when carry trades were aplenty, and that's when the markets were really the whole, Miss Watanabe and all those stories. Back when those carry trades were really kind of like the spotlight in the currency market, but that's kind of where we're at right now. Isn't that true?
We are in a bit of because a lot of people are comparing the situation post-pandemic and then especially for the Bank of Japan to to the 70s or so, but or the 80s, crisis-wise or so. But for mainly for Japanese traders, we have to go back, in my opinion, more like a kind of 90s trade, when the carry trades were aplenty, as you say, until those famous days in 1998, when we had the blow up of LTCM, and the whole card house fell apart. That's the first time, really. That was just, I think, a year or so after I started market making in the yen, where that thing blew up, and where we had a 20 big figure drop in dollar yen in 2 sessions, really, which I think some people may never even see in their career, but that was pretty impressive. And that's the first time when those carry trades have been really put under a lot of pressure. And but since then, there's already been a few more periods where the carry traders have had a good time, right?
Right. So let's talk a little bit about your views on the yen, and how close are we, in your opinion? How close are we to the Bank of Japan actually fulfilling what we thought was going to happen in 2023, but here we are sitting in 2024? How close are we to them normalizing rates, and what does that look like to you, and how do you see it?
Yeah. So let's go back just a year or so, and when Ueda came in as a governor of the Bank of Japan, just before leaving the seat, Kuroda went to make the YCC, the yield curve control, a bit more flexible, and that was a bit of a sign to the market as well that, oh, when the new governor comes in, he is going to be the great reformer, which he hasn't been so far. He has been very, very slow in reacting. He has been very slow in putting everything in place to get the conditions right for a rate hike. And more than a year after he took the seat, we are still in negative interest rate territory. But in my opinion, we are very close. We are very close to a change in that. Regardless what is happening right now, we have been talking, and we talk about that on our shows virtually every day as well, that the window for normalization is rapidly closing as well, potentially, because we have seen the economy actually dipping into recession at the end of last year in Japan. And we have this uncertainty overhanging over what's going to happen in the wages. But my base case for now is still that we are going to get at least a move back to zero. But then the rest will hang in the balance, because no later than this morning, about a month or 2 months after the Japanese government upgraded their assessment of the economy, they downgraded it a notch already again, citing difficulties with the consumer, and we had a bit of a negative Tenkan as well today. So really, where we are now is everything is going to depend on what's happening with those wages, and that is going to tell us whether they can continue to hike, at what pace, possibly, and especially what's going to be really, or how wide that window for normalization is going to be open. So he has been preparing the market, Ueda. I think we are going to get there. This is still the base case. I think whatever happens right now, he was telling us that inflation was going to come down in the second half of this fiscal year. It has come down, but he hasn't changed the rhetoric on whether they are going to normalize or not. So the preparations are really there. So I would say, taking us out of zero interest rate policy, yes. Are we going to go for more increments to hike rates? That will depend on the wages. We have seen,
you know, I want to interrupt here, just because you talk about like a window. There's a window, right? I believe that this is true. Just a couple of weeks ago, we got some pushback, not only from Ueda, but he confirmed, I forget what his deputy governor, what's his name?
Uchida?
Ochida, They were a little worried about this, disinflationary pressures that were coming throughout, the world. And obviously, if they're trying to get out of this deflationary spiral, and then, inflation has come down enough in their view, I think that, it's a valid point. Like, hey, we need to make sure that doesn't hit us. But maybe this, the stickiness that we're seeing in the US, maybe that's going to be more of a global phenomenon, and maybe this is the window coming up really soon that the BOJ could move. Would you agree with that?
Oh yeah, absolutely. The fact that the inflation came down or is coming down in Japan, it has actually been brought up by Ueda himself. He was expecting it, but he didn't change his point of view then. They are trying to fight back against too much expectations for taking them really to high levels. Never expect Bank of Japan to go to levels of perhaps even the S&P, which is at 1.75%, let alone levels where ECB or the Fed are at. We can forget about it. But their window is still open right now, but it might be closing very rapidly. Imagine if we get, even though wages are expected to rise at a pretty decent level again, maybe even record levels. So that would give them the leeway to hike more. But they have to take this window to take us out of the zero interest rate policy, because the regional banks are really not liking any of it. They can't make money at all right now. And let's also not forget that they have a good possibility now to use what's happening in the Japanese stock market as a bit of a leverage. You know what I mean? To actually hike rates, because imagine that they needed to hike rates in an environment where the Nikkei would be going down. That would be putting pressure on companies as well. So now is still the window.
Right. And so not only do you have, you have the Nikkei, but you also have a weaker yen, which is, nearing multi-year and I guess we could probably argue multi-decade levels that we're getting close to. That with the weakness in the yen and the strength in the Nikkei, as you pointed out, this is the window. So let me ask you this then. Because here's where a lot of the speculation comes from. That people have been talking about, traders have been talking about. If the BOJ should move this year, what's the reaction function of the market? Because a lot of people think and don't believe that the yen is going to have some explosive move, that there's not going to be this huge unwind. It's going to be kind of just kind of a slow grind. Are you in that camp, or do you think the yen will strengthen quite a bit? And do you think that the Nikkei is going to pull back quite a bit?
Well, I think we need to take into account several things here. Where we are now, the big Japanese investors, we call them the whales, they are waiting to see what Bank of Japan is going to do. They are now holding back from buying, for instance, JGBs in big amounts, because they think that the Bank of Japan is going to put a bit upward pressure on the yields, and so they are holding back for now. But once they start to hike at the BOJ, and let's assume for a minute they go to zero, and then they add, let's call it 0.2, 0.3%. Mechanically, it should have an impact on flows, right? So because those Japanese investors right now, since Ueda was so slow in preparing the terrain, right now they have to still put their money to work. And what they are doing right now is to buy again foreign bonds. We have seen over the past month and a half, especially since the turn of the year, that they started to buy US bonds again, even a few European bonds as well, because they just, in the meantime, have to put their money to work. So how it may look, we've had a bit of a sample of that last year. There was a period last year where the Japanese investors, thinking that Ueda may react faster or go faster, that where they went out of the foreign bonds. We had a little bit of a spike in the Japanese yields, and then they went back into parts of the Japanese yield curve. I think mechanically, once the Bank of Japan moves, and then you add on top that perhaps other central banks will start to look at perhaps reducing the rates a little bit, we may see this mechanical shift of Japanese investors moving out a little bit of the foreign markets and going back into their own markets, because that is what they hinted already at. So what it means is that in theory, in that period, the yen should strengthen. I don't know whether it's going to have a lot of impact, may have a bit of correlation impact on the Japanese equity markets. But let's not forget that the Japanese equity markets are supported in a way as well, because there is a bit of inflation in Japan. So I'm not sure how big the effect will be. Correlations have come and gone over the past year.
Sure, but I think what you're trying to say is then the move that we're going to get is really going to be dependent on is the Bank of Japan, as the Bank of Japan, let's say, raises rates or tries to normalize, however you want to view it. If they're moving at the same time that, let's say, the Fed is, and the Fed has to raise rates too, because maybe they're fighting sticky inflation, then the reaction is not going to be huge. But if the Bank of Japan is trying to normalize, and you have other central banks that are cutting rates because they are, quote unquote, normalizing or bringing their rate down to wherever they think their nominal rate is, that divergence trade is going to really spur some stronger buying in the yen, let's just say.
Yeah, I would say so. And then all depends on the speed and the amplitude of what they are going to do. Because for now, we can see that the Japanese JGBs, and especially the 10-year, are extremely flatlining, because everybody is just waiting what they will do. And that now in turn is weighing on the yen again, because we saw since the beginning of the year, the yields elsewhere have been rising again due to this sticky inflation environment, and the yen is getting a knock on the head again. And because you can turn it how you wish, you look at the forward rates, you look at the swap rates. If you're long yen in this environment, waiting for the Bank of Japan, it's just too much of a wait, too long of a wait. You're paying away cash every day, because when you're long yen, and that is what is happening now. So what I expect is when they will go to zero, let's say, let's just talk about the base case. Let's say April, the beginning of the new fiscal year, they go to zero. Then they hint at what may come. Depending on that, the JGB yields will start to move. That could attract those Japanese and other investors to reinvest in Japan. You should have a bit of positive yen flows, and then it will depend on the speed and what happens elsewhere. There, my base case is that, and I don't know if people listening here have been listening to Face every day, but I've been saying on the first day of the year, the first phase of the year, I said, and we were trading around 142 in dollar yen. I say my base case is for this year is that, yes, we are going to see a period of volatility, possibly yen strength, when they will start to go on the move because of the mechanics of everything. But I do think that we close the year higher than where we started the year. So
it's at 142, and we're significantly higher than where we started the year. So
I'm not a yen bull for the more longer term.
Yeah. So let's we talked about the yen, and we talked a lot about it, but you also wanted to talk about the Swiss franc, because the Swiss franc, you and I, since we happen to talk pretty much every day, and we're in the same community, and we discuss a lot of Swiss trades. At the end of the year, the Swiss was getting just absolutely so strong, and you and everybody else, and we all just talked about end of year flows, but it got a little exaggerated. Now, where do you see the Swiss, going into 2024? Because it has been one of the weaker currencies throughout the course of this year. You're muted, by the way. I'm sorry.
So far, so good. We've been talking about the Swiss for a long time, as you say. We were spectators around the end of the year. Took us a little while to figure out why the Swiss remain strong. We know what the S&P has been doing, right? And I've been looking back at those comments. They've actually started to hint at letting the Swiss strengthen from mid-2021. And that was the first leg when the Swiss actually started to strengthen. Played that one for a little while, especially against the euro, because I'm not a huge euro fan myself. And then we had this acceleration when really Jordan said that buying Swiss franc was good to fight against inflation. All right. So they did not raise rates to where other central banks were hiking their rates. They stopped at 1.75%, but they bought Swiss by the droves, right? They actually sent their reserves levels, FX reserves levels, who somewhere spiked a lot over the course of prior years, where they intervened the other way around, when they judged that the Swiss franc was already too strong, those interventions, so their FX reserves rose dramatically. They actually shaved off 6 full years of FX reserves build-up. We are back to 2016, 2017 levels of FX reserves. That is how much that the S&P actually bought Swiss franc to fight deflation.
And I guess we should probably mention at this point that the Swiss franc is stronger, or was stronger, right around the same levels that it was when the Swiss National Bank removed the floor back in 2015.
Yes. Yeah, the whole move brought us below levels where and we are around still. If you look at Euro Swiss, for instance, okay, just one thing, 2015, nobody knows exactly where the bottom was for Euro Swiss.
Right, it was, depends on what system you were looking at, sure.
It's a guess. I remember my colleagues in London, that I was sitting in Tokyo, and I remember my colleagues in London saying, like, we are doing orders like 300 points up and down, but we because nobody knows where the rate is actually. So it was an absolute mess, and nobody knows where the actual low was. So yes, we have gone markedly below those lows over there since that time. And then, so Jordan and the S&P kept their rhetoric until around, let's say, the end of October, November. But then the year-end flows did the rest. Because since really end of November, Jordan was starting to hint last year, that the Swiss franc had gone enough that they may stop buying Swiss franc. But then the year-end flows were so negative dollar, they were so bullish Swiss, because the stock market had never followed the moves higher, which is a bit a payback of when your central bank is actually doing stuff like that. So there was a lot of Swiss franc that people just needed to buy. And then from the end of the year, 27, 28 of December, a few of us in the room and myself, we started to go take the other side, and we started to sell Swiss franc. And I bought options, I bought dollar Swiss options, bought some Swiss crosses in the process as well. I know that you bought Swiss crosses or cross versus Swiss in those days as well. And now we are 2 months later, and here we are. So we've gone down to 83s in dollar Swiss. So now we are at 88. That's give and take 5.5%, 6% higher on the top of my head. And the Euro Swiss moved up about, what is it, 2% or a little over 2%. So we are correcting the year-end acceleration. We are correcting whatever happened in the dollar at the end of last year, and now we are here. So far, the rhetoric from the S&P is that they stopped buying, Swiss franc. They also said that the Swiss franc is strong. They also said that companies, exporters, are complaining about the Swiss franc being too strong because importers on the other side of the trade have to pay up too much. And then what else happened is that their FX reserves have stopped going down. Now we have seen a month and a half. Well, the first month was a bit flatlining, but the second month the reserves have gone up. Now you have to know as well that if your dollar Swiss goes up, your Swiss-based reserves are showing a bigger number. So a lot of that is revals. So the thing is, in my opinion, is that we are going to have, and I'm just taking my paper by hand, the next SMB.
Well, you know, we can't see your
Yeah.
chart. We can't see your screen right now. Are you going to show? Did you want to show your screen and what you're looking at?
I can show it, but I'm just have a little paper here with the central bank meetings.
No, just go ahead and do it that way.
I'm just so the next meeting is on the 21st of March.
Okay.
So, and we also have to know that the SMB only meets every quarter, right?
Yeah.
So the speculation which is going around now is that since inflation in Switzerland is coming off, since their data have been showing a slowdown in the GDP, we have seen weaker retail sales. We have seen a wrong balance in the what was it, in the trade balance as well. The imports are really really going down rapidly, and there will probably that's my base case anyway. There will likely be a bit of speculation now that the S&P actually may move their interest rate in the meeting in March, because if they don't do it in March, they have to wait until June. Now, what I think going forward, we are now approaching the end of February, is that the S&P, at least the speculation will be that the S&P may do something about the interest rate. So I expect for the next 2-3 weeks this weakening or weaker Swiss franc to persist, and then we'll see, because Jordan and his friends, and especially Jordan, he will not want the market to completely undo the work he has done by buying Swiss franc to fight deflation. He also doesn't want the market to completely undo it and to send dollar Swiss to up to 95. So that is something that we will have to watch. And I can show you, if you want, a level on the dollar Swiss, which is a bit my magic level right now.
Sure. And while you're doing that, let me ask you a question too, because you know, and I want you to think about this answer as you're going, and you can go ahead and show your charts if you wish, or show your screen if you wish. The one thing that I wanted to ask you is, you know, looking at stocks, and they're obviously very elevated and you know, on many different metrics as we trade near all-time highs. If the stock market does correct a little bit from current levels, and let's just say, you know, just call it your garden variety between 2 and 7% correction over the course of the next couple of months, one of the currencies that tends to be a safe haven type of currency tends to be the Swiss franc. So do you think that you would see flows into Swiss francs if we should see some sort of garden variety correction in the stock market?
That is the uncertainty that we have right now with this whole picture. And that's why I'm saying that, and for instance, I've done 2 options really in the dollar Swiss for the top side. One of them I let it go because I wanted to take profit as well, and I already hedged a little bit on the other one because of this factor as well. Because the yen has left the scene, right? The yen to play risk is not playing ball. You can't really, if you see, for instance, where the S&P is trading right now. We've been trading up to 5,050. We're trading 2% lower, and the dollar yen is still where it was when it was trading at 50.50. Now, the dollar Swiss has gone up to close to 89, and now we're trading back below 88 or around 88. I think that is a little bit still hanging around in the Swiss franc, together with the fact that we have done a pretty decent move. I would argue that perhaps there is maybe one or two currencies that may qualify as well for this risk play if you want, but we can do that another day. Look at the antipodiums like Aussie and Kiwi, for instance. But in the case of the Swiss, it is something that we need to take into account. Now, if you allow me, I'm just going to show perhaps one chart.
Please do.
And it's going to be the dollar Swiss, okay? Because we're talking about the Swiss. This really is what I'm looking at right now, okay? And I start with the weekly, and then we move back down to the daily. So we've had this whole move lower, okay? At the end of the year was an absolute massacre at times. We had this big zone here at 88, around 88, 10, 20. Remember, we talked about that quite a bit over the shows and over in our chat rooms. And look at this, where the weekly cloud comes in. And we have done this whole thing since the end of the year. We're coming back. The weekly cloud, we stopped right there. So that's a first indication for me that this is a relatively important level. Then I'm going to move down to the daily. And look what else we have over there. This is the rally back in October, going back to 2022. And this is in 2022. This is really when Jordan has said really that they were going to continue to buy Swiss franc. That's when really the big leg lower, the last big leg lower started. So we have this 2022. Then we had the rebound in the dollar, the global dollar rebound from July into the end of into October-ish. And then we had another central bank meeting there where Jordan said we don't change a thing here. Then we had the big Bill Ackman moment where the dollar yields got sold off and the bonds ramped higher. And
that end of year move, yeah.
Yeah, and in surplus, we had that big buying of Swiss franc, which really accelerated into the end of December. All right. So now, and I'm only going to take this October down to the end of December move, 61.8, high 88s. Okay. This trend line here from 2022 over that high in October, where does it come in? Around 88, 85 as well. And that's what I identified. And here we've got a few lows, a few highs here. That's why I identified this in the room as well. And when we came up into this level, so we broken another smaller trend line, we broken above 88, but then I was saying like, well, hang on a bit, because there's some really big levels coming up here. Okay. Yeah. So that's where I also started to hedge some of my my higher calls on the dollar yen, on the dollar Swiss, sorry. So now for me, we're in a bit of a wait and see mode, and the dollar is giving back a little bit, as we see, versus quite a few currencies barring the yen. We're in a bit of a wait and see mode, and now we are in a wait and see mode, I think, until what's happening. We are going to get PMIs tomorrow, but I think globally speaking, okay, we look at the bigger picture. I would not be surprised, okay, I would not be surprised if we get some sort of a move around in this zone here, somewhere between hanging around in the 87, 88 zone. Perhaps if we already hold 88, that would be actually very bullish, and then it could go through. But I would suspect that getting closer to the meeting, the S&B meeting, some people will start to speculate a little bit, and I would not even be surprised if we break temporarily above this level. This is kind of the way I'm looking at how dollar Swiss, for instance, trades. And then we need help from this one. And this one is close to your heart, Blake, if I'm not mistaken. That's the Euro Swiss.
You're correct.
Look at what we've been doing. That big channel downwards. This is the end of the year. We've broken, but those year-end flows, I mean, it's rude for me to say you should throw your charts in the bin on year end, but look at your charts and pick them up again when the 1st of January starts, and then look at what happened in the beginning of January. Yep, we started to correct. Okay, for this one to continue, and we are going to need support from the Euro Swiss, and there's one good reason for that, and that's trade. Europe is still Switzerland's biggest trading partner. Okay, if we continue to hold levels, I would say somewhere in the 94.5, we should go and have a look at the top side of this channel, in my opinion, which is in the high 95s towards 95.60, 95.75, perhaps higher up into that meeting on the 21st of March. Therefore, I think it is kind of important if we hold the 94.5, low 94s, if any month end or so sees another, because we had 3 month ends in a row where the Swiss franc got bought. So we have to take all those things into account. Should hold, and this should help all the rest of the Swiss pairs to continue higher. And with that, I can stop my share right now.
All right. Well, K-Man, I have the pleasure of working with you throughout the course of the day, but and getting your views as they come. But some traders that are listening to you right now are not familiar with who you are, and they don't know that you co-host a show with Ryan Littlestone. So can you talk about what's the best way for traders outside of our community, what's the best way for them to follow your work?
Well, I'd say join Forex Analytix for a starter, because we are in there every day. You, me, Ryan, our whole crew. We are chatting to people there every day. We've got various chat rooms. We've got the general room. We've got the Flowonomics room where a few different people are in there, where we chat about different stuff. We have our trades room where we update our trades as live as possible, or we talk about them in the chat room, and then we update them a bit later in our trades room. We have plenty of rooms where we discuss, we put news and research, and then we have every London 10:30 a.m. Sorry, London time, not GMT, London time. Okay, it's because we sometimes change the clocks, so it's every day 10:30 London time. We do the flow show. And then I very regularly, nearly on a daily basis, join you, Dale, our good coach, and the others on the face show. So that's the easiest way. If you want to get in contact with me personally, just drop a line, I don't know, on Twitter, or come and visit us. Blake, I still think there's this $1 for 10 days. So I mean, if people want to give us a go and get in touch with us, they can just join us and contact us.
And that sounds and I appreciate that, and I know those traders that aren't familiar with our community, they should definitely take a look at where you're at Forex Analytix. I do want to remind everybody that K-Man here, he's on a flow show, the Flow Show, which is a free show hosted by Forex Analytix every single day, and giving out his views every day in the European hour. So make sure you join him there. K-Man, I tell you, it's been great to have this one-on-one conversation with you. It's usually us trying to have conversations with everybody else. It's really wonderful. Yep. I can't wait to have you back here on the Trader Summit. If you guys liked what K-Man had to say, make sure you give him a thumbs up. Jump down in the comments down below, especially if you agree, disagree with anything that he has to say about the Swiss or the yen. And I'm sure he would love to see your comments. So guys and gals, thanks so much for tuning in. K-Man, thank you so much for being with us today. And I'll catch you guys on the next video.
Thank you, Blake.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.